Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Good morning, Ben.
Hi, Will. Happy Tuesday to you.
Yeah, it feels like a Monday still. I don't know. It's been an interesting morning to start the day already. I,
It's good. It's
yeah,
it's nice that it's starting to get cooler. I think it was down to like low 40s last night, and it felt good when I was getting up this morning.
Yeah, it feels good, but I don't know. I've already had some fights. So this morning I ripped my shirt as I was coming in into the office here. So now I have this hoodie on over a t-shirt instead of a button up as normal. So hopefully the viewers give me a little slack on that. Sorry, guys.
I
But
think they'll give you some grace.
yeah. Well, you need it after Mizzou again losing to Georgia last week. Whenever,
And they were close. They were in it for a while, up
yeah,
until 4 minutes. They were
up
in it
until 4 minutes.
up until the last 4.5 minutes. So
Yeah, that's all right. That's all right. So anyway, looking to the markets, we're seeing some maybe positive movement this morning on the soybean front, especially. But what kind of changes have we seen on the week overall?
yeah, so you are right. We're seeing soybeans rebound just a little bit after kind of a soft landing last week. December corn up 14 cents to 6.80. November soybeans down 37 cents to 13.74. Again, that's on a week change. We're seeing soybeans up 15 cents this morning. Soybean oil up just about a cent per pound to 63 cents and a third. Soybean meal down $12.20 per short ton to 405.30. Old crop wheat for December up 54 cents to $9.12, and then new crop wheat for July up 46 cents to $9.11.
So obviously adjustments that continue to watch as we're in harvest now. But what main factors are leading to the spreads there?
Yeah, so the big thing that's not going to show up in those futures prices, those are all futures price adjustments. The big thing is the changes we're seeing in crop basis at the moment. And we've certainly seen crop basis fall, a dollar plus in some parts of the Corn Belt over the last week or so. So just want to iterate, those are futures prices, not the actual cash prices that farmers might be seeing or the declines farmers might be seeing. Ethanol stocks increased nearly 8 million gallons last week, despite ethanol production falling 13.5 million gallons for the week, representing weak demand for the product. Following a rough export sales report a week ago, export sales were a little bit healthier this week, but not flashy. Corn, soybean meal, grain, sorghum, and wheat were all up week over week. U.S. small grain summary that came out on Friday was a shock to the market, showing 2022 U.S. wheat production down 133 million bushels. That was less than previously reported on a lower yield and fewer acres. The September 1 grain stocks showed corn stocks below all pre-report estimates, so a bullish factor there, while soybean stocks came in above all pre-report estimates, a bearish factor on that side of the equation. Wheat stocks were as expected, but surprising given the large reduction in production. Open interest futures and options positions of Chicago wheat were flat on the week, while corn futures and options were down 2%. Soybean positions were up 3% week over week. Managed money positions were down across the board. U.S. weekly export inspections on Monday were up week over week for corn, soybeans, wheat, but down for grain, sorghum ever so slightly. And then looking at the conditions for crops across the country, harvest continues, albeit we're only 22% harvested on corn and 22% harvested on cotton crops. So harvest has been 75% of the corn crop is mature and 20% has been harvested. Sorry, that's my bad. 22% of the U.S. soybean crop is harvested. And while it's moving along, we could be in for a couple more weeks of conditions ratings just for kind of the late nature of harvest progress so far.
It sounded like a little bit of a Yogi Berra math there near the end for a second. 90% is mental and the other half is physical, something like that.
I jumped the line. I was looking at soybeans instead of corn. Got
But
off.
well, one of the big shocks that you brought up coming out of Friday last week on the small grain summary, quite a bit lower potentially than many expectations. What kind of shock did that send through the market?
Yeah, I think for the majority of folks, they looked at the report summaries from Friday and saw the big drop in corn ending stocks. Keep in mind, this is the end of the fourth quarter for corn and soybeans, so this represents the final carryout. USDA's world ag supply and demand estimates will realign to match these estimates for ending stocks. So this is the last part of the year, and I think everybody looked at those corn numbers coming in well below trade, 135 million bushels below the average trade guess. And I think that was the initial reaction. However, I would contend that the biggest surprise came on the wheat side. The trade hit the wheat number, the wheat's ending first quarter stocks for wheat perfectly at 1.776 billion bushels. However, if you just glanced at that number and took that as kind of the result, we took a whole lot of wheat out of the balance sheet on the production side. So 135 million bushels less than what we thought was going to be in that production number. And that came from a bushel per acre reduction in yield. And that came with 2 million less acres of wheat. I learned something. I did not realize that USDA does not match up FSA acreage numbers with so they don't match up acres in August like what they do with corn and soybeans sometimes. Those alignments come in September. Excuse me, in the small grain summary. And so I was very, very surprised to see the acreage reduction in wheat. But if you take that into account and adjust for the yield, certainly you do see a smaller wheat crop. So to me, that was the big story. Weaker demand is what led to those grain stocks being right in line with expectations.
Well, I don't want to muddy the waters jumping from crop to crop, but it seems like really across the board, and we've been talking about this last couple of weeks, but we have this trend of expected market tightness, or at least domestically, with production concerns, and then also the production concerns that we've talked about for the last several months in the Black Sea region. But really, this comes at a critical time for our competitors in South America as they're going through their planting season now. So give me an update there. What type of opportunity is that opening the door for our neighbors down south?
Yeah, so that's a good question. We're at the very beginning of their planting period. So if you look at the Brazilian soybean crop, it's roughly 2% planted so far. Their first crop, corn crop, which is the smaller corn crop, right? It's 25% of their total production. Is 28% planted at this point. So a very early season in their growing season for them. So it certainly might open up the opportunity given that our tightness and lack of ability to ship product out of the country. But it's very early for them too. So I think we've got a long way to go. I just want to touch real quick. You brought up this opportunity to maybe pick up some exports. A year ago, we had a hurricane that hit the port of New Orleans, and we talked about how slow of an export season we got off to for the new marketing year last year. Just given that we couldn't get product out of the country due to that hurricane, kind of slowing down export terminals. We're seeing very slow export inspections again this year. In fact, if you look at the soybean side, we're slower this year than we were last year. A couple of reasons for that. One, we're tight on stocks. The second reason is we are having trouble on the Mississippi River getting product down the river, and that's slowing our export inspections. So while last year we started off very slow, this year we're even starting off slower.
Well, you talk about some issues in the past, getting stuff out of the port of New Orleans, kind of talking about current factors, looking at ports like in Savannah, Georgia, have recent events such as like Hurricane Ian in Florida impacted that at all? Is that impacting the movement of ag products?
So I don't think we're seeing it, shake out in the markets. We might have a couple of delays as ships maybe didn't, were knocked off their normal trade routes or something along those lines, shipping routes to a certain point. But as far as actual shipments out of those ports, we're not seeing much of a change.
Gotcha. So that remains fairly controlled and minimal there. But looking elsewhere, we are seeing some export sales tick up. Granted, not great. It's I guess easy to come up when you're off a down week. But is that a promising sign this week? Looking at those maybe slightly increased export sales.
Yeah, I think so. So they were much improved this week compared to last week, albeit, still not flashy, right? Like, I mean, we're still not seeing some of the levels that we would expect to see this time of year. However, we are seeing some opportunities there. The U.S. dollar is coming down off its high as other countries work to support their domestic currencies, and that's making our currency a little bit more competitive. Albeit we're still at a very high rate there. So I do think that is providing some chances and some opportunities to sell some product. So we are seeing a little bit of a boost there.
And then just to reiterate, talking about the harvest progress that's being made currently, what might farmers maybe have an expectation of looking at the export market as harvest progresses?
In terms of just the export market?
Yeah, well, in terms of the export market first, then I want to talk about the domestic market after.
Okay, sounds good. So that's a good question. We normally think of the export market as driving spreads between contract months. So you can think about a deferred month of like March over December corn, for instance. And so that's where we see the exports come in, is how, if we're getting shipments on the books, at what point might we see that product being, pulled out of the country for those international markets. So that's where we're seeing that. I'll iterate again. We are seeing some challenges with the river logistics, kind of slowing down that bottleneck and increasing costs per bushel, if you will, to move the product due to low river water levels. That is dropping soybean basis bids. So this is maybe the opportunity where this export market, while we normally think of it in terms of spreads, because of challenges in logistics, is actually impacting the basis market as well. So we're seeing some softer basis. Again, normally basis is impacted by harvest conditions and products coming to that local domestic market. I think some of our export channels, just from a shipping side, are impacting those basis bids as well. So I think there's potential. This is a good season for us to export product. And I think we'll continue to see some renewed export sale numbers, or better strengthening export sales numbers. But certainly, challenges globally to move product against higher prices and a strong U.S. dollar.
Well, talking about those local logistic issues, and the impact that they're having on local basis, I wish we could have just a heat map set up that shows maybe the rolling changes. But if you're a farmer right now, what's the best spot in the country to be sitting in from maybe a local standpoint?
Yeah, so I mean, in some ways, these are all impacted by the same factors, right? I think there's this notion that if we continue to increase domestic, or like our local demand, that we're going to have the strongest basis possible. And to some extent, that is true, right? Like you increase, let's just say crushing capacity within a county, you're going to see some stronger demand. But over time, what we see is we see production adjust to that, and you produce more of those bushels in that area. And so a prime example, to your question about, 10 years ago, Iowa would have had very hot corn basis. And to some extent, they still have very strong corn basis because of all the ethanol development and growth in the state of Iowa. But we've also started to produce more through more acres and better yields. And so that production adjustment has come in and kind of moderated basis a little bit. Truthfully, if we're looking at the hottest basis in the country right now, it's coming in cattle feeding areas, because you have to have the product regardless of how high it is to feed that. And it just happens that area is where we feed cattle is corresponding with the areas of the country where we're seeing the drought having the biggest impact on yield and lowering production.
All right, looking ahead through the rest of the week, what should producers really be keeping an eye on? What market movers might be coming up?
Yeah, so a relatively slow week, mostly just our normal reports and ethanol report coming out 9:30 on Wednesday, export sales, and then our U.S. ag trade data for the month of August comes out on Thursday, and then the CFTC commitment of traders data comes out at 3 o'clock Friday afternoon.
All right, so some good information there to keep an eye on. Maybe not the flashiest things in the world, but still important as always. If you'd like to learn more or watch more of our content, you can do so at brownfieldagnews.com. You can also check out the weekly livestock market update with Scott Brown with the University of Missouri and Brownfield's Megan Grebner. Ben, thanks for joining me. I'm Will Robinson on Brownfield.